Hey there, tech enthusiasts. Welcome to the Tuesday edition of the Tech Stocks Daily Podcast. We've got a jam-packed episode for you today. We'll dive into Apple's stellar Q3 earnings, the potential fallout from Google's $20 billion search deal, and Google's sizzling hot antitrust ruling that's shaking up Wall Street and grabbing Bernie Sanders' attention. Oh, and you won't want to miss the hype around Meta, rising growth scores, and big bets from major investors. Intrigued? Stay with us as we dissect today's top tech stock headlines in under 10 minutes. Let's get started. All right, tech enthusiasts, buckle up because today is all about the empire. You guessed it, Apple. And they've been neck deep in headlines for all sorts of reasons. From impressive earnings to potential legal quagmires, it's been a roller coaster. Let's break it down. First off, let's wind the clock back a bit to the fiscal quarter that ended on June 29th, 2024. Apple reported its impressive earnings for Q3, with revenue ringing in at $85.8 billion, up 5% year over year. Way to flex those financial muscles, Apple. Earnings surged by 11% to $1.40 per share, breezing past Wall Street expectations. With such solid performance, the tech titan continues to prove why it remains a dominant force in the market. Now, what's interesting in Apple's revenue breakdown? Well, iPhone sales continue to be the company's bread and butter, contributing 52% to the coffers. Services, which include fan favorites like the App Store, iCloud, and Apple TV Plus, are not far behind, grabbing a 24% share. The rest, Macs, iPads, and wearables make up the remaining 24%. A diversified portfolio, huh? But it wasn't all roses. Apple had to grapple with cooling iPhone sales as the once-hot 5G upgrade cycle simmers down. Oh, and let's not forget about that pesky competition from China, which has been putting up quite the fight. Nonetheless, Apple's services segment is bailing them out with steady growth, offsetting some of the downturns in hardware. And looking ahead, there's hope pinned on the AI-oriented iPhone 16 and Apple's ambitious expansion plans in India to keep the numbers up. Meanwhile, fiscal performance wasn't the only game in town today. Apple got caught in the crossfire of Google's antitrust debacle. A federal judge has ruled against Google's parent company, Alphabet, alleging illegal monopolistic practices. Ouch! Why should Tim Cook be on tenterhooks, you ask? Well, Google's cushy $20 billion a year deal with Apple to be the default search engine on iPhones is on the chopping block. If Apple loses this golden goose, it might feel the pinch despite its nearly $400 billion annual revenue. Speaking of search engines, JP Morgan's analysts highlight a slew of possible moves for Apple. Think hitching their wagon to Microsoft Bing, DuckDuckGo, or creating their own search engine. The latter could drain resources to the tune of $10 billion and would still lose them $12 billion in revenues over 5 years, even if they dominate search queries on their own devices. Tough calls ahead, Captain Cook. To add a cherry on top, let's talk share prices. Thanks to stellar performance, Apple is trading only 12% below its all-time high after a 304% rally over the past 5 years. That's serious growth. If you'd parked $5,000 in Apple shares 5 years ago, you'd be sitting on a cool $22,000 today. Sweet returns, right? Yet today's turbulent waters have investors wondering, is it still worth diving into Apple stock? With looming antitrust challenges and tempered growth prospects, Apple still brandishes a hefty premium. But let's face it, in the wild tech jungle, Apple remains a titan whose path forward brims with both challenges and delightful possibilities. So let's hoist a glass of apple cider and keep an eye on this tech juggernaut as it navigates the choppy waves of the market. Hey tech enthusiasts, buckle up, because today's news about Google is sizzling hot. We've got a court calling Google a monopolist, Bernie Sanders throwing some serious shade, and an exciting Made by Google event just around the corner. Let's break all of this down. First up, the biggest headline. A court has officially declared Google a monopolist. Let that sink in. After 4 years of intense trial proceedings and an Everest worth of evidence, Judge Amit Mehta didn't mince words. In a 286-page judgment, the mic drop moment came when he wrote, "Google is a monopolist." This ruling stems from Google's behavior in the search and advertising markets, a space that's long been their personal playground. The judge noted that Google has abused its dominant position, a move that could provoke massive changes in the tech industry. We're talking potential restructuring, increased regulations, and perhaps even breaking the company into smaller units. Stay tuned, because this could shake things up like a tech industry earthquake. Next, Senator Bernie Sanders wasted zero time hopping onto Twitter, X, to weigh in on the court ruling. He applauded the decision as a major victory for the American people, and didn't shy away from calling for some serious action, suggesting it might be time to break up. What's up, tech enthusiasts? Today was all about Meta platforms. Let's dive into why Meta was hitting the headlines in the mega way today. First off, Meta is shining like a diamond in the growth stock category. According to Zacks, Meta's been flexing its financial muscles with impressive earnings growth and efficiency. The company's earnings per share is projected to skyrocket by 42.8% this year, beating the industry average of 27.3%. That's like Meta hopping on a rocket while others are just gearing up for takeoff. Plus, Meta is artfully utilizing its assets with a remarkable sales to total assets ratio of 0.67, notably higher than the industry average of 0.59. It's no wonder Meta secured an A growth score. Beyond the growth factor, let's decode the cryptic buzz about options trading surrounding Meta today. Our friends at Benzinga noted some eye-popping activity. 54 extraordinary options activities caught everyone's attention. Big investors, often referred to as whales, have shown a bullish inclination towards Meta. Imagine a 53-35 divide leaning bullish. Yeah, that's what's happening. Specific deals worth mentioning? A mix of puts worth a cool 148,710 and calls rounding up to a hefty 2,677,552. These aren't your regular backyard investors, folks. Someone's placing serious bets here. These options tracing between the $100 to $1030 strike price range over the last 3 months is like a thriller plot twist. Volume and interest metrics in these contracts are top detective tools for these high-stakes players. To sum it up, Meta's current status reminds me of a classic game of poker. Big moves, strategic placements, and everyone's trying to guess the next play. Last but not the least, how does Meta stack up against its own kind in the compute and technology sector? Spoiler alert, quite fabulous. The entire group of tech pals boasts a 11.2% average return since the start of the year, while Meta's laughter echoes across with a 34.4% return. High five to themselves, right? Zacks places Meta at a number 2 rank, which is just a whisker shy of the absolute top. So they've got solid analyst backing and elevated earnings trends. But wait, let's not ignore their close competitor, GoDaddy. This web wizard has an even higher return of 38.4% and an industry advantage in internet delivery services. GoDaddy's industry itself moved up by 25.8%, which adds some healthy competition for Meta in overall performance. Of course, those numbers and high-level performance paints a gaudy picture of a competitive market and consistent growth story for Meta, making it a juicy musings ground for all your tech investing thoughts. What do you think, folks? Have you laid your bets on Meta, or are you cheering for other tech stars like GoDaddy? We'd love to hear your take. Drop your thoughts, feelings, and predictions in the comments below. Who knows, maybe we'll feature your comment in an upcoming segment. Happy investing. Hey tech enthusiasts, let's dive deep into Apple and figure out whether we should sell, buy, or hold based on today's juicy news. First up, on the bright side, Apple reported stellar earnings for Q3 with $85.8 billion in revenue, up 5% year over year. They smashed Wall Street expectations with an earnings increase of 11%, hitting $1.40 per share. Holy smokes, that's impressive. iPhone sales still dominate, fueling a 52% revenue share, while services like the App Store and Apple TV Plus nicely supplement the pot. And after a 304% rally over the past 5 years, Apple only trades 12% below its all-time high. That's like solid gold in a volatile market. But there's a dark cloud on Apple's horizon. The antitrust ruling against Google's dolloping heaps of cash to Apple to be the default search engine could spell trouble. Imagine the discomfort if Tim Cook had to switch from Google Search to Bing, or even brew Apple's own search engine. It's like switching from a Tesla to an old Honda. Reliable, but a significant change. Given these high-flying gains and potential storm clouds, what's the smart move? For long-term investors, I'm going to say hold. Here's why. Apple's fundamentals remain solid. They've shown an ability to pivot and diversify. Plus, the upcoming AI-oriented iPhone 16 and expansion into India offer exciting growth prospects. So, while a potential upset from the antitrust drama could trim some wings, the bird is far from grounded. Remember, in the wild tech jungle, Apple is that lion whose roar echoes across the market. But folks, always do your own due diligence before making any investment moves. Look beyond the hype, get into the nitty-gritty, and apply it to your financial goals. It's your hard-earned money, so take your time, research wisely, and consult with a financial advisor if needed. Well, folks, today's market activity was one wild ride. Apple continues to flex its financial muscles, though it faces looming regulatory hiccups. Google's wearing the Monopolist tag after a massive court ruling, with even Bernie Sanders joining the fray. And Meta is shining bright, raking in impressive growth and catching the eyes of major investors. It's clear the tech industry is as dynamic and unpredictable as ever. If you enjoyed today's roundup, make sure to smash that like button, subscribe for more daily tech news, and share this video with your fellow tech enthusiasts. Be sure to tune in tomorrow for another dose of the latest in tech. Keep it geeky.